Everybody, morning. I guess there's good and bad being being like the I guess among the smartest people know, or like knowing about everything. Um, whole bunch of people ask you questions, and like all of a sudden, got like 6 questions right before I'm supposed to go live. I'm like, darn man, come on everybody, don't you know I'm about to go live? Anyway, that's it's good and bad. Seems like people only want to talk to you though when they want to know something. I digress. I digress. Anyway, um, welcome to the show. Got an interesting topic today. This kind of hyped up all of a sudden, and it's like, where's the opportunity? Is there real opportunity here on space-based data centers? And I don't know. I don't know if it's really. I mean, it's probably going to happen, whether it's practical or not. Or there's lots of advantages, like 24/7 sun. Just deploy some solar panels. You don't have to worry about it. So it's kind of interesting, I guess you might say. And you would think free cooling in space, but not really. There's no air. Think about this. It's a vacuum. So a vacuum is actually insulating. There's no, there's nothing to take the heat away. So it's a different kind of problem. There's no, there's no atoms to transfer the heat somewhere else. So it's kind of interesting problem when you think about that. And anyway, there's good and the bad. Good is, you can deploy solar panels. There's 24/7 sun, as long as you don't put them where they go behind the earth or something like that, or behind something else. If you get it where it's always in the sun, no problem. No hiccups. 24/7 solar. So, and that is everybody talks about fusion. Like, that is the biggest fusion reaction that we have anywhere near us, and it's 24/7, never stops, never slows down, never hiccups. It does ebb and flow over a longer cycle, but we have solar minima and solar maxima. And welcome to the show, everybody. Welcome back, my morning monsters, and welcome to the only show that I know of that helps you navigate the absolute circus of modern finance in a way that maybe makes a little bit of sense. So, you know, this thing. Um, I just don't like the opening that the AI wrote here, so I'm just gonna skip forward. And today we're gonna talk about something more absurd than, I guess, anything we've talked about lately. Probably a lot more profitable if we can get in on the hype. And I'm talking about putting the internet in space, but not really just the internet. I'm not talking about Starlink or, um, you know, Leo, I guess is what Amazon calls theirs. But giant power sucking, heat belching warehouses that run our digital lives, in launching them into orbit. And we're talking about data centers in space. Now, this is not just going to happen next week, right? This is not something that somebody can deploy probably even next year. And, it's kind of a sci-fi get rich quick idea, it seems like. And you're not wrong to be skeptical. I mean, it's all vaporware. It's all kind of a plot out of a bad Bond movie. But when people writing checks for this bad movie are the likes of Google, Elon Musk, Sam Altman, OpenAI, you have to at least kind of explore what idea they're talking about here. Take a peek at the script of this bad movie, because when the Bond villains start building their layers, well, even if nobody's invited to the party, there's money to be made on the construction. So why on Earth, or off Earth, should we say, would anybody want to do this? And it turns out that our little blue marble here, they're not making any more land. Get a little bit crowded. You see, the AI revolution that we're all so excited about runs on a lot of electricity. If you've been here and heard me, I've talked about it quite a bit, and it gets pretty hot, like surface of the sun kind of hot. Data centers on Earth are already becoming a massive headache. They suck up so much power that communities are starting to kind of protest them. The expansion of XAI's Memphis data center is looking at sucking down as much power as at least half of the rest of the city. And people are kind of like getting a little bit testy about like this. They suck up a lot of power. They use water for cooling, and it just depends on how the cooling system is. Some people are like, oh, you're going to use billions of gallons of fresh water. Yeah, if they use traditional heat cooler, water wall heat coolers, but a lot of the newer AI data centers don't use that. They can't. They have too much heat. They got to use something different. So they're not using so much water. And then they're vulnerable from everything from hurricanes to tornadoes to your cousin Larry spilling his soda on a server rack. Now, imagine a data center in space. A special orbit bathed in 24-hour sunlight, free, unlimited power, free after you get it all up there. No more fighting with the local power companies. The cooling, well, space is a giant empty vacuum. You just have to figure out how to have a radiator big enough to get the cooling out there. And put it on the shady side of your satellite where the sun doesn't shine. Voila, right? I mean, we put space things up there all the time. Heating is usually the problem, not the cooling. But the universe can be your heat sink. Despite there being a giant vacuum and there not being a lot of anything out there, the potential, though, is that you can use radiating heat. And with a radiator big enough, no problem anymore. I mean, it's kind of like the ultimate green solution if you ignore the whole, we got to burn a literal crap ton of rocket fuel to put everything up there. But hey, these are just minor details. Details. And the speed, well, light travels 40% faster in a vacuum through fiber optic cables. So you get better latency numbers. For all of you high frequency traders out there, imagine your trades getting executed faster, 40% faster. I mean, it's kind of the ultimate hedge. It's like showing up to a knife fight with a lightsaber. Now, before you go liquidate all your positions and bet it all on the space book, let's talk about the challenges here, because there's a couple. For one, this plan is ridiculously expensive right now. It is ridiculously expensive to launch anything into space. We're talking about thousands of dollars per kilogram. And for this to be economically viable, that cost needs to come down to like $100 per kilogram. And that's where SpaceX's Starship comes into play. If that thing works as advertised, it can be a total game changer in this plan right here. And then there's the radiation. Space, and we're not talking about radiating heat. We're talking about space not being a very friendly place for electronics. Cosmic rays are constantly bombarding pretty much everything in space. We have a nice atmosphere that kind of absorbs and deflects a lot of it. But when you put a spacecraft above our atmosphere, those cosmic rays start to kind of monkey with everything. And it can cause traditional chips to just kind of freak out. I mean, just go off the rails. Google's been testing their AI chips, and they're surprisingly tough, but this is still a problem to solve with shielding, and shielding is more weights, and there's all sorts of problems there. And then there's people that work at AI data centers. There's servers to be maintained. There's equipment that fails. What if your equipment's 150 miles up in the air? You can't just call in the IT guy at 3 a.m. to go replace a server rack. I mean, it's a little bit longer commute, a little bit tougher to get up there. And here's the thing. These are engineering problems, not really physics problems. And when there's a $1 trillion prize at the end of the inevitable rainbow, engineers get kind of creative, very creative sometimes. So who are the players in this new space race? And more importantly, how do we, the morning monster drinkers of Wall Street, get a little piece of this action? Well, you got the big boys, of course. Google's Project Suncatcher. It's already working with a company called Planet Labs to launch prototype satellites in 2027. This is already going. PL is the ticker. Papa Lima. Planet Labs is a public company. Their stock is already on a tear. They've already built and launched quite a few hundred satellites. So they're not just the new guy on the block here. They got a little bit of knowledge about what they're doing. They're the ones building the bus, so to speak, for Google's AI brain that might be up there in space. And then you have Rocket Lab. These guys are kind of like a Swiss Army knife of the space industry. They can build rockets, they can launch satellites, they can help build the satellites, they can even make fancy solar panels that run satellites and laser communications between satellites. They're kind of a one-stop shop if you're looking for building an orbital data center at this point. Their stock has been a little bit of a roller coaster. I've got some exposure to it right now. They're a solid long-term play on the growth of the space economy. And then you've got the more adventurous opportunities, like Intuitive Machines, their ticker, Lima Uniform November Romeo, LUNR. They're kind of a lunar exploration company right now, but they're getting into this data center game through an acquisition. They're a little bit of a wild card right now, but if you think about it, if they could actually pull off what they're thinking about with this acquisition, they could have a huge opportunity. You could think of them as a penny stock of the space data center world right now. High risk, potential high reward, but you could lose all your chips. And that's just some of the public companies right now. The private market, absolute insane. You've got a startup called StarCloud out there. They just launched a satellite with top-of-the-line NVIDIA H100 GPUs on board. They stacked this satellite full, and they're backed by all the big venture capital names. You got Eric Schmidt from Alphabet or Google buying a rocket company. You got Sam Altman, OpenAI, sniffing around another one. And I mean, the smart money is getting into this game. So what's the big picture here? I mean, Elon Musk and his infinite, and some might say insane wisdom and plans, he's talking about building satellite factories on the moon, launching them with an electromagnetic railgun. I mean, we can all dream. He wants to build a civilization that can harness the power of a star, which is on the Kardashev scale, a type 2 civilization. I mean, it's the kind of stuff that makes you wonder if he's a genius or a little bit on the crazy side. But then I guess we should just talk about the takeaway, right? The future is being built right now. Handful of very rich, very ambitious people got money to blow on crazy dreams. And right now, we're not really looking at building it here on Earth. We're looking at building it up in space. And while the idea of a data center on the moon might sound a little bit science fiction, the investment opportunity right now, if people are going to pour billions of dollars into it, it's very, very real. So keep your eyes on the sky, everybody, because the next gold rush probably isn't going to be here on Earth. It's probably going to be in low Earth orbit or maybe even out on the moon. I mean, Amazon's building rockets, SpaceX building rockets, Rocket Lab building rockets, everybody looking to get up there. So there's opportunity all over the place. Fascinating right now in that space. And SpaceX probably going to go public next year is their plan, with probably the largest IPO in history. It's going to be a wild ride. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. It's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you might lose money. Just a guy on the internet that gets lucky here and there. I got a bag of unicorn dust. I don't really have any crystal balls, so I make predictions. Sometimes I get lucky, sometimes I don't. My higher conviction plays are usually the ones that work, but not all the time. TSLL, I've been beating the drum on Tesla for a while, and here we are, all-time highs yesterday. Beautiful. Beautiful. That pop yesterday. So we've got the targets coming up here. We went kind of right through the 488 target, 500 next target on the smaller bounce here. Bigger bounce, look at that, 550. And then 600 above that. Lots of money, lots of gamma, lots of stuff at play here on these stocks. And I lost my gamma. I was going to pull it over and I don't know what tab it's on. Genius. That's a genius move right there. Pro move. Where the devil did I put it? There it is. I'm going to pull it out on its own tab. So right here. Wow. Not right there. Dang, 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 dang. Right here. Bullflow.io is where I've been getting this. And if you look at Tesla, type it up. This is an interesting heat map. There's a large gamma at 500, and this can act like a magnet and pull price right up into it. Now we're in the green, like this. When it's green on this particular heat map, that means we're a positive gamma, which means that as people buy more calls, market makers are trading against us as traders. So as traders buy more calls, the market makers are hedging against us in the green zone. As you buy more puts in the green zone, the market makers are buying against us. So that tends to mute price action when you're in positive gamma. You can go Google a lot about gamma and kind of learn more. This is not something I use necessarily to trade, but I do keep aware. I mean, this is an interesting little stacked in here kind of thing where you've got a large level, the biggest level on the entire map right there coming up this Friday, another large level and another large level. And then 500 for this Friday is the biggest level. 510 for next Friday is the kind of the next biggest expiration to pay attention to. And then 490 for this Friday is another big level. And it turns out that 490 is right where we are. So it's kind of interesting. I've been using this particular thing more for my NASDAQ trade in the afternoon. Turns out that when a whole bunch of people are playing options all at the same price tends to go there and not really do much. And for the NASDAQ trade that I do, where I'm picking up a few bucks, it's kind of handy. to know where that level is. Anyway. Yeah. Well, I mean, solar flares are cosmic rays, basically. So, I mean, it's high energy particles. That's what, solar flares are high energy particle ejections from the sun. It's basically what cosmic rays are. And they can penetrate pretty much everything. That's why a lot of people say that humans can't survive long term off of this planet, because as comic rays fly through us, they kind of do damage to our organs and cells, and one zips through your brain, like cause all sorts of damage. There's a lot of shielding that goes into space stations and spacesuits and stuff like that, and spacecraft that humans are going to be on. It's just an interesting problem, and there's long-term detrimental things that happen to astronauts when they stay up in space for longer than 6 months. And if we're going to Mars, it's probably going to be longer than 6 months. And Mars doesn't have an atmosphere that shields the planet from the solar flare materials like Earth does. So, can we have a moon base? I don't know. This is all going to be interesting. Like, maybe it's Optimus robots or humanoid robots that occupy all this stuff. So, anyway, it's going to be an interesting world. This is why I want to live forever. I mean, I want to, I've been around for like 40 something years now, and we've gone from not even having computers be very common. I mean, I've always had a computer at the house, but computers used to be, you booted up and it said C:\/ alligator mouth. And now you got a smartwatch does more stuff than those early computers. And it's, that's just in my lifetime so far. I'm like, God, I want to see where all this goes. So I love it. I absolutely love it. I just want to see where everything goes. I mean, I have a self-driving truck. I mean, it's like freaking awesome. Does 92% of my driving. And everybody says Tesla can't solve self-driving. It's like, seems like it's pretty solved to me. It does pretty much all the driving on the road. The only problems it really has is parking lots. That's kind of like you think about it, that's like 8% of the, getting in and getting out of the parking lots. Once they get all that fine-tuned out, like, what next? I mean, it's, the Waymos out there, they don't focus on parking. They don't focus on, I mean, they just focus on dropping you off. So, in some respects, Tesla is actually more advanced, because I've been able to push the button in my driveway, say go, it'd take me to a place, find a parking spot, and park, and it did so reasonably well. Now, it doesn't like my office parking lot, and as Brongheimer says, my office parking lot is a freaking nightmare if you actually look at it. I mean, it's got weird entrances, and I actually park behind the building instead of in front of the building, and to get to my office, and the truck just can't figure that out. And it's a concrete parking lot with Berlini striping on it, so it also can't see the striping very well. And then my home, I built the driveway, and it's not actually like connected to the road. It's actually a kind of a geogrid thing. And the truck just doesn't know where that driveway is, so can't really figure it out. Has grass growing through it. It doesn't like to drive on grass, and it's kind of like a prissy cat, doesn't like to walk in the wet grass. So anyway, yeah, and dark side's where it's all at. Anyway, so I digress. Things are getting crazy, and they're happening pretty quick. Tesla's big pop here the last couple of days, in case you haven't been paying attention. This big move here. They put robo-taxis on the road in Austin, Texas, with nobody in the car this weekend. Like, nobody at all. They took a few of the robo-taxis, deployed them out there. They're not actually picking up anybody. They're just practicing right now. But they're running all over town with nobody in the seats at all. And people saw that and they're like, "Oh, snap. Boom, we're gonna gap it up here, consolidate, and we're gonna gap it up here." So that's the hype. Like, is that practical AI? And you look at the chart here compared to the NASDAQ, and you go jump over here, QQQ, and you add Tesla to it. If we look back to the start of the year, get this thing on the right. Tesla's been lagging. Started out with a big down. We're coming back up, but we've been lagging. Big tech. So, trying to catch back up. Right there. Yeah, quietly up 30%. I've been beating the drum on this that things are happening. So it's crazy. So we still have upside to go. If we get up here, time to be more cautious. All right. It's like, yes, Elon does have a big payday if we can get the stock price way higher. But he's also got to meet a bunch of performance metrics. Like, he's got to sell a crap ton more cars. He's got to move a whole bunch of full self-driving subscriptions. He's got to sell a bunch of Optimus robots to get those big paydays. So Tesla's got to do a lot of things for Elon to get those big paydays. It's not like it's just the stock price goes up and he gets paid. It's not that easy. So ES overnight, jumping back down. We're still sitting here at this resistance. This 618 level right here. This high. This low. This 618 zone. We're still sitting here, chopping it. We've not been able to break above, which presents the opportunity to get the extension down. This is the warning sign that's sitting here on the chart. It's very evident right now to me. This is a giant warning sign. Warning. 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 We have not been able to break through that. Now, if all of a sudden we do turn and break through these highs, probably going higher. But right now, this is support, this uptrend of lows right here. We break down below that, probably coming on down. Those targets haven't really changed in a few days. We're looking at a potential bottoming zone right here in the 67.55 area up to 67.80. If we get a little more aggressive to the downside, we could be at 67.20. And if we actually go down as big as I thought we would before we ever rallied up to where we did, probably coming back in the 66.20 to 66.50 area down here. This bubble hasn't really moved up or down since October, or I guess November, really, beginning of November, when we did that initial drop. Back here, we dropped off. I drew this on here that we would probably drop down. We would probably come back up. We would probably come back down. I've removed the other arrows, but I guess actually I drew it from back here. Come up, come down, come up. We just haven't done this part yet. Time is the hardest part. Like, it's all is going a little slower than I thought we would. Thought we'd go a little bit more volatile, but I guess things are slowing down. So this could take on out into the beginning of the year. Maybe we have a Santa rally, maybe we don't. We're in the time frame for one, but can we actually get it going? Now, interesting with the gamma levels and the NASDAQ. The NASDAQ. So when we look at this chart right here, this is NASDAQ futures. Made a bottom back here before Thanksgiving. Made a top right here, beginning of December. And we've pulled back off of that. It's been a pretty rough go for the last 10 days or so. Pulled up. Looked like the Santa rally might be getting started, but that pesky 618 sitting there. And this pesky 618 down here is probably what we need to go hit. Now, interestingly enough, the 24,630 level, basically, generally corresponds with 600 on QQQ. The two giant gamma levels on QQQ, I was going through this during 30 Minutes of Awesome last evening. I would pull up NDX on here, but they don't have NDX on this heat map. There's two giant gamma levels for this Friday on QQQ. Those two giant gamma levels right now are at 620 and down here at 600. And they don't show up as highlighted. But that's where the two big levels are. And we closed yesterday right at 610. Right in the middle. That's 10 points down, 10 points up for QQQ. Now, the factor for that... Golly, man. Truck passing by with a Jake brake. 600 times the factor, generally 41.05. Get you a NASDAQ price, 24,630, which just happens to be right in the vicinity of that 618 line. So if we go down to visit that 600, that'd be where it is. 620 though, 41.05. Why 41.05? I'll show you in a second. 25,451. That's just right in the vicinity right here. Interestingly enough, just a little bit higher. All kind of interesting. Kind of interesting. 25,451. Kind of went up there and tagged it, and then we're pulling back. Now, how do I get 4105? Like this. NDX divided by QQQ. Roughly 4105. You see it's difficult to kind of pull it out on the hourly chart here, but on the daily chart, we've been bleeding it off a little bit. It was higher back in October. Now, it's roughly 4105. It's roughly. We do get, because my NASDAQ data feed lags, it's only accurate when the market actually closes, when they sync up. So these daily closes right there are the accurate read. Right now, I'm getting QQQ data, but not getting NASDAQ data, so this is running away. And it seems like it's got skew, but it doesn't actually have skew. So 4105, roughly the flip point right there. And that's the multiplier. So you multiply QQQ by 4105, and that gets you roughly the NASDAQ price. Roughly. If you didn't know you could do math on the tickers and come up with your own factors, like, welcome to the party. Now, it doesn't stay exactly the same all the time. As you can see, it kind of bounces around just a little bit. Just a little bit. Russell also tagged the upside resistance. Now we got to see what happens. Do we retest the breakouts before we go higher, or do we fail the breakout support, come on down to the roadmap line, and then do something deeper? Can't tell you right now. Like, that was the high probability thing, tagging that 2600. We did it. Not sure what happens next. Oil finding a little bit of support right here at the prior lows. So far, we did tag the lowest low on oil we've had since somebody said 2021. Yeah, look at that, 2021. Broke below these two lows. Now, lowest low could be it. That little poke lower could be the last move. I don't think so, but that does satisfy the potential for this to be done on the downside. Taking it back a little bit, big inside candle, breaking down. I still believe we're going below 50, but it is possible that that little touch was it. That little touch lower. Gold still grinding. Still grinding right here. If we break down, can do a bigger retrace. Upside still 44.73. Somebody asked me yesterday, what's the most likely thing that gold is doing right now? I said consolidating in just a high volatility consolidation. Like, I expect it to kind of stay in this range for a little while. After we pushed out 3 standard deviations back here in April, we spent the next 5 months consolidating. Like, we made a big move and we needed to chill out for a while before we could get enough energy back in gold to go higher. Right here, we spent a longer period out of the 3 standard deviations. So this could result in a longer period of sideways chop. Could, doesn't have to. Very likely. A lot of times when we poke out 3 standard deviations, we end up coming all the way back down in here near the mean, which is the roadmap line at this point, my signature roadmap line. And we haven't even poked into 1 standard deviation yet, which is typically what we do after we poke out 3 standard deviations. We'll typically poke back down into 1 standard deviation. Recharge a little bit before we can go higher. Now, that 1 standard deviation is coming up violently and quickly, so wouldn't take much to come down here and tag it and then be set to go higher again. So I'm just cautious on a pullback for now on gold. And Bitcoin, oh yeah, it was not green a minute ago. I like it. Before I went live, we're still hanging out in the red zone, looked like. Yeah, nice turnaround here. So right now, off that low that we just made, you know, what, Monday? Got to move up. We got to retrace. It's only 3-wave move so far. And it's in the ABC correction zone. So we need this to get up into the 91,000 area. Retrace, get on up higher, 93,000. Then pull back a little bit, maybe come back to the 90,000 area, then get that continuation on up. So that's what I'm looking for. I want this to come on up here into this 90,000 area. I want to get that. I mean, sometimes Bitcoin gets a little crazy too, so we could go even higher. I want to see a retrace wherever it stalls out, holds. Don't want to overlap this high right here. If we overlap that high, signs are pointing to making a lower low than we made back a couple weeks ago. Back here in November. And it's kind of this simple at this point. Like, if we start breaking, doing bearish things, this high right here is important right now on the smaller time frame. If we break below that, tips the odds that we're going on down lower on this, and we don't have much room before we get below this. Not much room here. Not much room. If we get below this one, odds are very elevated. We're going lower low than we did back here before Thanksgiving. There's your levels to watch right there on Bitcoin. Right here at 88. We get below 88. Not looking good for the home team. Long Bitcoin. We get up here above 91. We can keep working higher. But we do have big upside resistance sitting here and sitting here. Ethereum, also in the small time frame here, this doesn't look like anything except a consolidation, and it might result in another dip right there. That looks like a consolidation. We're not breaking through a bunch of roadmap lines, and that's probably going to take another dip. May not, but it probably will. Global liquidity still looks like we have the setup to come down here, back to the roadmap line, back in this vicinity. Dollar. Now, that's kind of one move down. We might get a retrace back up to the roadmap line, but the fact we poke below 98.5 sets up the potential that we're going to go further down and make a lower low than we did here in September on that low right in there. Apple, as long as we can hold the uptrend lows, we still have that 292 target up there. 292. Amazon is testing the daily roadmap line. So far, 3 days that's held support. If we can break back above this high right here, probably looking for a test of that 240 area and getting above that resistance there can set us up for a new high. If we break on down here, we want to see this neckline kind of hold, which I don't have it drawn in here very awesomely. Want to see that neckline kind of hold. If it does, we can still go higher. If it doesn't, we're probably going to go back down to like 140 on Amazon. Google, retesting that 304 area. Could push on down to where these highs were. Right there. If we can hold that 337 target still in play. If we don't hold that, there's your target right down in there. That 240, 250 area. Plus or minus a little bit. Meta, I still want to see this make one more little push right there. Bounce and go. If we get that deeper pullback on QQQ/NASDAQ into the end of the week, some of these may come down to those ideal support zones and then bounce. Microsoft right now is really testing the pattern here. So far, we did 1, 2, 3, got the lower low. If we can hold on to this, break back above this stuff right here, break back above this 492 area, we can take it on higher. But if we don't do something bullish here and we get below this low we made right back here, this is probably coming on down in a more severe way. Now, the downside target would be down here around 415 to 425, and possibly as low as 400, maybe as high as 440. If we can break back higher, we have the resistance up here around 520, and then we get above that, we can go tag that 565, 567 area up here. We came up shy of that back here. So if we get bullish, that would be the path. If we break down here. Nothing's clear. Nothing's high probability at the moment. Just that's the two paths likely. NVIDIA coming down for the second test. If we don't hold it, coming down to the breakout test from last year's highs, or the beginning of the year's highs, down around that 150 area. Right there, Tesla breaking out. I want to see it continue. Keep on going. Now, it could rest a little bit here. Like, this is off of this high, this low, this move starting to be a little played out. We could see this rest for a couple days before it gets the energy to come on up here. That would be very typical of price action. But the hype is real. Netflix, looking for this to hold that test of this zone right here. Come back up. Actually I am looking for this to come on up to the roadmap line and possibly up to this downtrend of highs right up in here. Somewhere in the 115, 120 area for Netflix. Timeline on that, it could be well into January, February next year. You can look at the kind of the decline rate here. If we just bounce kind of like the same climb schedule, February. All right, gainers. I'm going to pull things moving $2 more up in the pre-markets. JBL, looks like 243 is the target. Light, watch out for that to retrace more violently. AGQ is leveraged silver. Spotify, looking for this to have a bottom right here. This was a nice A, B, C correction. Tagged right in the ideal spot. Move up, retrace. If we can break through the roadmap line. Next upside resistance here at the 618. When we get above that, sets up the 820 target up here. That's a pretty big move from 574 to 820. App 11 kind of stalled out below a breakout. May come down to the roadmap line for a secondary test here. Wouldn't surprise me one bit. Hut cutting some sort of deal on data center deal for their power. AI players, and if we can get them manage the breakout here, 127 could be the upside. Absolute craziness going from about 7 to 135. DBVT. So once the hype's done on Hut, though, like, did they just sell all their power? If they did, they don't have more. They're not making power, so yeah, be careful. And this looks like an absolute garbage show right here. Reverse splits galore. Reverse split. Garbage show. Not touching it. A-Lab hasn't been able to maintain a breakout here. Just been sitting on the roadmap line. Couldn't muster the breakout. Couldn't get through that 618. Couldn't even get to the 618. So this kind of opens the door for more downside in the short term on Astrolabs. COHR. Watch out for that to pull back. That's pretty lofty. Hadn't been to the roadmap line since August. Due for a deeper retrace. PPLT keeps rocking and rolling. Next target on that is 206. I've been highlighting how that was probably talked about how that was probably going to go for quite a while. If you caught the move from 120 to 160, congratulations. If you catch it on up to 206, you did really well. ALB coming up into the resistance here. Very slowly grinding this area. This was a strong resistance or a strong support zone on the way down. Turned resistance. And now we're trying to grind through that resistance. So we may see more volatility in this area before we can break on out. Another dumpster fire. Leverage chart. STX. This is getting really lofty. Watch out. The retrace on this is going to be pretty violent. This is not a stock that's ever gone absolute exponential. Bulls. Not really showing strength here, oddly enough. This is a FANG 3X leveraged ETN. If we can pull this together, 361. MU, probably at a resistance. Probably needs a revisit of the roadmap line before it presents more opportunity. PLL, Palladium, probably coming on up 160 area 150, 156, 160. This chart's a little muckier than Platinum's chart. Yeah, some resistance right there at 156. Sabina, you should go through the fib class. There's CRDO. And you should also watch the, since you're a Termite Trading Lab member, you should go watch the in-person event all the way back to the first one I did. They're all pinned in the channel. You should watch the in-person events. It's all Elliott Wave. And TER. Retrace right there. CIN. Retrace right there. SQM. I retrace back here. Big picture, that's coming up on the 618 resistance. Baidu. I broke it down to just a 5-page thing. You don't have to have any big book or anything like that. Like that. SNDK. Come back right here. HSBC. You know, the overlapping highs is pretty easy. Like if you have impulsive price action, it looks like this. You have this high, you have this low. There's no overlap. Now, when it's sloppy price action, come over, and that's overlap. A little overlap right there. When you see overlap, that's not impulsive. Impulsive are trends. Not impulsive is not a very strong trend. So like this high, that low, this high, this low, that's overlapping. If that's part of the same move, which is probably not, actually. Why probably not? Because of this big move with no pullbacks, then we have a pullback, an advance, a pullback. So these are probably 2 different degrees right there of the move. You just get that stuff with years of doing this. And it's not about oscillation. You're simplifying it too much. This looks like an ABC. Like you get these overlapping moves right here in corrections. And that's when the price action is unreliable. Corrections. Corrective price action. That's when it overlaps corrective price actions equals unreliable. Means it may like getting stopped out or taking a left turn instead of a right turn or taking a squirrely on you during corrections, highly likely. Trying to predict B waves inside of a 4 is kind of like throwing jello for distance. Now, impulsive moves or clean ABC moves that respect the fib lines, a measured bounce that I describe. Let's go to a cleaner chart here. When I talk about a measured bounce, you run the fib line from the bottom to here. We get this move that comes back right here. That's very clean. Hits the perfect 618. Then you can run this, and this. The only difference between this being an ABC and a 1, 2, 3, it's either a 1 or an A 2 or a B. C, target is here. 3, target is up here. So that's the big difference, is how far does it go? So if you find these where they do this and do this, this is the high probability piece of that, higher probability. Of course, since it's a correction, it can always stall out right there and then resume the trend. Trend would be down in this case. This is a correction, ABC, continuation lower. So you can still get screwed on these, but if you're in right here, you're at least going to get this piece to here, and if it reverses on you, you can always stop back out. That's where I get some of the biggest wins, like NEM. I played this coming into this year. I actually bought here and went deeper. I was like, it's not so good, but I'm just going to keep holding on. I played a 60 call, 60 strike call, cost me about $1. I played a lot of them. Put several grand at this. Now, in my own account, when we did that retrace and failed to break out, I stopped out for a minimal profit. My mom's account, I just didn't look at it and I let it roll because she wanted me to risk money on gold. Ended up being one of the biggest trades I did because it went on up here into the 80s and I booked it out for like $25 a contract. $1. And I had her 20 something contracts, so that ended up being like quite a few $1,000s. Maybe it was 10 contracts, 10 or 20, 10 contracts in her account. I had some more contracts in another account, another retirement account. So I had her 10 contracts, 25, basically $24, $23, $24 of profit. Times 10 times 100. So you got 0, 0, 0, 2, 4. It was basically a $24,000, $25,000 payday for her account on that one trade. I was early. It was upside down. And then it moved. I stopped out most of my trade. I kept like 5 contracts. 3 contracts, something like that, $300, $400, $500. Ended up with another like $6,000 for me. All in all, this is like a $30 or $40,000 trade I did, and that's probably my biggest single win this year. And I played leaps, like these were back here. How did I know what to do? Just got lucky. Bought the 60 strike out to January 26th. Back here in December of 24, when we did this move up, retrace, did go a little deeper. That's why when we did this, I bailed. I just couldn't hold on to the extra leverage I had in my smaller accounts. My mom told me she was going to buy gold and silver over here. I'm going to liquidate my account and buy gold and silver. I told her to wait. I'd buy her something when it set up. I made her way more money doing this than she would have if she liquidated a bunch of her account and bought one of those things on TV. So I was too over leveraged. We didn't just break out. So when we did this retrace, I bailed. I pushed too much into that particular trade. Now there's one particular setup for today. I don't really like it because it didn't do the big picture bounce. See, I'd be looking for this high, this low, and a break back above 84. But the algorithm found this trade right here, this high. This price action was below the roadmap line. Right here. So this actually cleared out, kind of negated this on the Python tool I have that looks for these. There's the high, here's the low, right there. Here's the close above the 618. Sets the target though, right there at 83, or 81, 83, excuse me, 81.83. Statistics on this are not good because there's no history of this ticker working out. Doesn't, you know, if you haven't taken statistics, 30 is a statistical population, so 2 doesn't mean anything. You can flip a coin 2 times and get heads. Both times. Doesn't mean that every time you're going to get heads. Doesn't even mean you have a statistical advantage for getting heads. Just got lucky a couple times. Now, bigger picture, this is the pattern I would be looking for. This algorithm I have here is not going to fire off even if we pop up here. This is too many candles. It's too long. Taking too much time to do the retrace. And the 3-day didn't hit. So this may come on down for a 3-day bounce. Right there. Anyway, bias for the day. Watch those levels. Still nervous on the downside, especially for NQ. I just got this feeling we're gonna pull it on down. I got a feeling. Then we're gonna bring it on down. This is the target zone right down in here. Anywhere around 24,800 could satisfy this, but it's gonna be best if we get on down and hit that QQQ level. Yeah, QQQ's got the same kind of right there, 599.59. At 600, where the gamma is. Boom. 620 is where the other gamma is, and right now that's a roughly the 50% retrace off of this low. We could still do that. It's kind of interesting that the gamma levels just happen to be sitting right in the vicinity. There's the 2 gamma levels. There's one right here. Price is at 610. And then the other one's down here for this Friday. So we're only looking out to this Friday. Do we go hit them? That'll be interesting to see. So back to Friday at the close. Friday at the close. That's the 2 gamma levels, and we're sitting smack dab in the middle. Right there at 610. Got big gamma there, got big gamma there. It's possible we just hold it in here until those expire off on Friday, and then we're free to move. So there you go. Alrighty. Can you give DRCT 30 seconds? I do requests on Tuesdays at 5 p.m. So DRCT was not on the list. It's not a mover. Wasn't anything moving this morning. There you go. That's kind of the expectation today into Friday, really. I expected to hold in the uprights. Now, could it get out? Yeah, it can get out pretty easy. This setup right here from this high, this low, this lower high, can easily take this down further. Same pattern. Measured bounce, extension, right down here. Just that right now the options players aren't betting on that happening. They're just piled up right here and right here. So there you go. Have a great day, everybody. I'll be back on Market Masters here in about an hour, and otherwise I'll be back tomorrow. Same bat time, same bat channel. Hunt for opportunities again. look at what's moving, what's shaking, what I expect to happen. Have a great day.